Good afternoon and welcome to the Light Science Technologies Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to CEO Simon Deacon. Good afternoon to you.
Thank you very much, and good afternoon, everybody. Welcome to Light Science Technologies Interim Results and Company Update, August 2024. Contents, Controlled Environment of Agriculture, CEA, Contract Electronics Manufacturing, CEM, and the Passive Fire Protection, PFP. We'll be going through these key three divisions in four companies. Jim will be talking about the consolidated financial results, and I'll finish off with the group strategy and outlook. There's two slides of disclaimers. Please read these when you have time. So, introducing the team today, presenting is Jim Snooks, CFO and Company Secretary, Andrew Humpsall, COO of the company, and myself, Simon Deacon, CEO of the company. I'm going to play you a short video just to introduce you to the company and the three key divisions that we work in.
At Light Science Technologies Holdings, our mission is clear. We offer solutions to some of the most significant current global issues. We have four businesses across three sectors. In the Controlled Environment Agriculture division, we have over 30 years' experience in two businesses, Light Science Technologies and TomTech. We provide turnkey technology solutions that use real-time data to create the perfect recipe for any growing environment. From our award-winning hardware solutions like SensorGrow and NurtureGrow to our proprietary control systems and performance monitoring platform, we combine cutting-edge software with our in-house UK-manufactured hardware to improve productivity, increase plant yield, cut costs, reduce wastage, and extend the growing season, whatever the plant, whatever the environment. Within contract electronics manufacturing, we own UK Circuits, a 25-year-old business and world-leading player in the field. UK Circuits supports clients at every stage of the procurement lifecycle, right through to expert technical support. From printed circuit board manufacturing to finished products, we work with a broad range of partners, both within the UK and globally, and service blue-chip customers across multiple sectors, including robotics, lighting, fire safety, sensors, pest control, and audio systems. Within our Passive Fire Protection division, we own Injector Fire Barrier, the UK's first independent approved installer of the patented Injectoclad system. Injectoclad is an acrylic-based graphite sealant that can be swiftly injected into building cavities, blocking fire and smoke spreading throughout a building structure. It is suitable for installation across all types of building cavities. Using Injectoclad, we can work towards ensuring that existing structures are safe, protected, and meet the latest fire safety regulations, giving peace of mind to owners and occupiers. Following the Grenfell Tower fire, the Fire Safety Act of 2021 and the Building Safety Act of 2022, there are over 11,000 buildings in the UK which are labelled as high risk. Passive fire protection is more critical than ever. At Light Science Technologies Holdings, we combine British manufacturing, innovation, cutting-edge technology, software, and expert knowledge to solve some of the most important global issues that we face today.
Right, just to move on to the key financial and operating highlights. We grew 19.3% between 23 and 24 half years, up to £5.2 million, a really good growth rate for this half year. We've got £51 million worth of quoted pipeline and sales opportunities, and we've got a committed group forward order book of £5.2 million, and some of this going into 2025. The key here was, one of our key management focuses and strategy has been increasing our margin, and our gross margin has grown from 20.9% to 26.6% in this period, which we're really pleased with progress. We've also seen cash and cash runway of just over £1.5 million with an undrawn debt facility of £500,000. And we've also enhanced our group debt facility with Close Brothers of £850,000. So it's put us in good shape for this year and next with a good cash runway. We've reshaped the group with revenues and profits following the two acquisitions late last year with Tomtech and Injector Fire Barrier. And we've also brought on two new board members, Dr. Graham Cooley as the non-executive chairman and Richard Mills as non-executive director, both bringing an awful lot to the party, with Dr. Graham Cooley having huge experience of the city and Richard Mills, managing director of Haygrove, got huge experience in the controlled environment of agriculture and supporting us with helping us create partnership and distribution agreements globally for the CEA market. Moving on, we've got three growth sectors, so three key divisions with four companies. We've got Tomtech and Light Science Technology in the controlled environment of agriculture, and both award-winning. But the key here is that Tomtech's got 30 years of experience. So now we've got over 35 years experience in the controlled environment of agriculture, providing technology from sensors, lighting, control systems, irrigation and installation. And we've got award-winning smart technology that we've won also. At UK Circuits, in the contract electronics manufacturing side, up in Oldham, we continue to grow this business, and it's our key manufacturing and quality, and we provide products to the finished state. So not just SMT boards, but also finished products. And then Injector Fire Barrier, our new business acquired at the end of last year in passive fire protection, the first independent installer of the patented injector clad cavity fire barrier remedy system. The group's overview revenue was 5.2 million, customers 250 plus clients and 75 employees. So what's driving the opportunity in the market? We talk about a large volume of market opportunity of 100 billion, and I'll break that down so that you can see our focus on what we're working on. In contract electronics, the focus is 2.3 billion up to 2020, and this has been growing due to the reshoring of manufacturing back to the UK and Europe, and we've seen this since the pandemic, and this continues today. We've also, in the passive fire protection with Injector Fire Barrier, got a market opportunity of £50 billion. There is over 11,000 buildings which are over 18 metres tall, which are high risk, and 33,000 buildings which are between 11 and 18 metres, which need remedial work doing on them and correcting to make fire safe. And in the controlled environment of agriculture with Tomtech and Light Science, the opportunity is global at 47 billion and growing at 11.3% AGR. So it's really important to see that up until 2033. It's really growing, and there's global opportunities which we're taking through our strategy, through distribution and partnerships. Moving on, what's gaining those trends is government policy worldwide. In the CEA market, it's very much about extreme weather, advancing in technology and dietary shifts. You know, we all worry about food security. Where's our food coming from? And with extreme weather, we're seeing this harder globally. We're either seeing fires, droughts, awful lot of rain in one area at one time, and it's becoming harder to grow in open agriculture. So providing the technology that we provide in a turnkey solution in the agri-tech side is really important to help this. We're also seeing a growing population and dietary shifts, And this is all driven by government policy. If we look at passive fire, this is driven by the Building and Fire Safety Acts, which is driven by government policy. And if in the CEM side, we're seeing shipping being more difficult because of the conflicts around the world. And so we're seeing a return to manufacturing here in the UK. So let's talk about the controlled environment of agriculture in the CEA market with Tomtech and Light Science Technologies. Global smart opportunity in agriculture is 47 billion and a CAGR of 11.3% up to 2033. The grow light sector is growing at 1.7 billion, and we manufacture a range, a suite of products in lighting to create a recipe of light. And this is growing at 21.1% up until 2025. So it's a key market for us with our grow light sector. In the agricultural sensor side, with our sensor grow product, it's £2 billion up to 2026 and a CAGR of 11.4%. So it's a really key growth for us. And we see agricultural sensors being more important globally to actually control and bring in the data to then be able to control what happens with our control systems, which I'll come on to. Current quoted pipeline is 43.6 million globally for the CEA division. And we've got a turnkey smart technology solution providing integrated systems for lighting, sensors, and environmental controls. Our global focus is distributions and partnerships, and our focus is America's East, Middle East, and South Africa and Australia, really key growing countries where we're focusing on creating partnerships. And you would have heard more recently, we signed a South African partnership with AgriLogic over in South Africa and quoted over £500,000 worth of work for them. And we see this as a key part of our strategy. Our clients that we're working with, some of them you would have heard of, Tiptree, Berry Gardens, who turn over £300 million worth of fruits here in the UK, Bridge Farm, Zenith, Dyson Farming, we're currently doing a grant opportunity with TRIP, open agriculture, and Haygrove, where Richard Mills is the managing director of Haygrove and is supporting us with partnerships globally. So what does this look like? We talk about Sensor Grow and its features and why is it so important? It's really important to see what functions it does. It creates air zones, so light, temperature, CO2, humidity and pressure. But also with the key factor, it has pucks within it and it's battery operated. And this battery can last up to 2 years in operation. And then we take it out, refurbish it and install it back into the marketplace. LoRaWAN provides the communication and that's possible up to 10 kilometers away. And that's really important if you're working in an indoor environment or outdoor environment because there's no cabling required. We're actually got a UKRI grant for sensor development as part of the Dyson TRIP project to monitor greenhouse gases and nitrous oxides N2O, and also to monitor root zones, which are soil temperature, soil moisture, soil electroconductivity, and soil pH. And the future development here is methane and ammonia. Ammonia uses up 4% of the power and energy required to create it globally for agriculture. So these are really two key things, methane and ammonia and nitrous oxides that we're creating in this sensor, which takes it further afield, not just in enclosed environment, but as you see in the picture on the right-hand side, into open agriculture, water courses, and eventually towns and cities as we open that up and it's in monitoring the environment that we live in. So bringing this together, we also created our own software. In the right-hand side of the picture, you will see a dashboard where we've created our own software so that this is live data coming from the sensors. And then from that software, it goes to our control system. This is all done on cloud storage, and we can then analyze this data to create the right growing environment in an enclosed space. From an outdoor opportunity, we can stop the wastage from how much fertilizer might be putting on the ground or nutrients. So we're actually saving energy, time, labor, and the cost of actually going over fields for whatever crops that you might be planting. So this is big data. It follows through with AI technology for the future. So you're starting to learn what's happening in your environment. And the future will see more automated growing facilities with less people within them as robots pick fruit or pick the produce, and the measurements are done by data and controlled by a control system. So it's got the perfect environment that it's growing in. So this is real time and creates historic data as well with an interactive dashboard. Thank you, Andrew. So moving forward, what does this provide in the CEA? What are we providing in products? Well, I've mentioned about the sensor, which you see here on the left-hand side, and our software creating AI in the future with our screenshot of a mobile phone there in the middle. And our acquisition of Tomtech brought in the actual control system. So if you're reading the data, the software is then telling you the parameters that you need to create within your glass house. The control systems then react and open and close the valve. So it will control heating, it will control misting, it will control the light, it will control how much dosing of pH and nutrients need to go into the soil. So it's that automated process that we're providing, which is the recipe for not only just the light for the crops that you require, but the environment that you're growing in. On the right-hand side, you'll see a lab, and that lab we work in conjunction with universities so that we can recreate your growing environment and set those parameters for you so that you can grow tomatoes, strawberries, salad crop, whatever crops that you're growing. We can give you a recipe for your environment to control what's happening, and you've got real-time data to save you money, to increase the yields, but also to extend the growing season. Thank you, Andrew. At UK Circuits, based up in Manchester, Contract Electronics Manufacturing Division, the CEM side, this company goes from strength to strength. Next slide, please, Andrew. And in that market, we see a market of opportunity of £2.3 billion. And the reason is this: since the pandemic, we've seen a lot of more manufacturing return back to the UK and Europe. And this is due to the uncertainty in the world and shipping lanes being blocked, but also the carriage and shipping increasing and the cost. So we're seeing a lot of return to UK manufacturing. A lot of our clients who might have split their orders with the Far East and the UK have now switched that over, so more product is being produced in the UK. As I mentioned, we don't actually just make an electronics board here, we actually make finished product for customers. So we continue the investment in new equipment. We've got 2 automated lines now on our surface mount technology, and we're looking to implement a 3rd. And we've also seen a real strong performance in our pest control sector and audio sector as well. So the sectors that we work in are pest control, sensors for fire and gas, audio, lighting, robotics, and more recently sports entertainment, which is a new sector for us, where we're actually putting circuitry into golf balls. Some of the customers that we work with, next, Andrew, are Sensonics, Cloud, Rentokil, very blue chip client, where we've been working with them for well over 12 years. Flamefast, who do sensors for gas and safety. Switch to Calex, and more recently Putt Shack, who are these are where the golf balls and the electronics are going into these golf balls. And we recently received an order a couple of months ago, which we fulfilled, which was our first order, and now we've received the second order, which in total we've done 10,000 units for Putt Shack. So it's really important to see that we're getting clients now from a new market building up to being a solid client, and potential could be £1 million. So this business has been going for 25 years, got a fast turnaround for our clients, so we can turn around products quickly, got turnkey solution from designing a product to actually boxing up and making it and shipping it to a distribution center. It's got high quality volume manufacturing facility here. We're proud to be a UK manufacturer, and we're an accredited provider. Moving on to Passive Fire Protection Division, our PFP. This was an acquisition we did towards the end of last year. On the right-hand side, you see a typical building that we're doing in Manchester Salford area. It's 25, 26 stories high. And this is a very typical building that we're doing. It's in apartments. And this is really driven by the Fire Safety Act of 2021 and the Building Safety Act of 2022. As I mentioned earlier, it's a 50 billion potential market opportunity. And that's because there is 11,000 buildings over 18 meters, which are high risk, but also 33,000 buildings, which all need remedial work doing on, which are between 11 and 18 meters. This work is carried out without having to disturb the occupancy of any building. So it's minimal disruption. It's cost effective, less waste, more environmentally friendly, and also is very much a much lower cost to do the work than it would be to do traditional fire stopping, where you might have to take down the facade and put traditional fire stopping in and then brick it up, or whatever the cladding is on the outside of a building, which takes 3 times longer and cost at least 6 times more. This is near-term cash generative with strong margins for the group. And what we're looking to do here with Injector Fire Barrier is also add in our technology side, where we put sensors into the cavity. So it protects and it's sensoring actual fire and smoke within a cavity rather than it being right in the center of the building. So it's an early warning system that we can provide on apps for phones, and it also can be connected to the main fire control system in the building. The contracts and quotes and pipeline, current quote pipeline for this division alone is 6.9 million and growing. Our conversion, we've done £600,000 worth of contracts which are in progress. And more recently, we won an order for £750,000, and that work started in June. So you can see these buildings are from hospitals, universities, student accommodation, flats, offices, hotels. They really do range and the occupancy within them. So it's really important to see that coming through, and the margins are very strong on this division. We're working with people like Ferguson's, Key Square, CGC as partners, just to name a few that we're working with. And we're working across the country. So we're working from London to Nottingham to Manchester, all the way across the country, installing the patent injector clad system. And we can really retrofit it into cavity barriers. We're not filling the whole cavity. We're actually putting a sock in and backfilling this sock to each level of a floor, horizontally and vertically. And this is what gives you your 2-hour rating so that you can get out of the building safely. So that's the real key to it. It's also IFC accredited. And this is where we make sure that all the product is photographed, measured, and also GPS marked on the building of where it's gone into the building to a drawing. So everybody's clear about how it's gone in and how it's installed. So the quality is there throughout before it's closed up, before the building is closed up. This is all about stopping the spread of smoke and fire within the cavity. The government set aside £5 billion to help building owners get this remedial work done. It might be a £50 billion problem, and it's going to take over 20 years to do all this remedial work. But there is money put aside to support the tenants of some of these buildings who are owner-occupiers of these buildings. We're compliant with statutory regulation and enable safe evacuation of a building. Thank you. I'm going to show you a very short video of how the injector clad system works. So as you'll see, there was a brick facade building going to come up as we move through the building, and it could be any facade of a building. But this one's showing a brick facade. First of all, we drill holes within the mortar, and this is at floor level, and you'll see the windows above. This is very typical. We insert steel pins throughout the mortar. We then take out the blockwork, the brickwork, every 2 meters, and install a sock on top of the steel pins which hold the sock while we backfill it with the injector clad material. The blockwork goes back in and put in place. It's all photographed and recorded. And if there was a fire, the yellow there is insulation, and it fills any void which it might come across. So as the fire takes hold and the flames go through the building, the injector clad material expands into that void, stopping the flames and the smoke spreading throughout the building. I'm now going to hand you over to Jim Snooks to go over the half-year results. Thank you.
Thank you, Simon. So I'm going to cover the consolidated financial results for the half year to the end of May, and then Simon will take us through the group strategy and outlook. Thank you, Andrew. So looking at the profit and loss, we saw a revenue growth of 19.3% from the same period of the prior year, of 4.4 million increasing to 5.2 million of this half year. And that was partly to do with a growth in the contract electronics manufacturing division. We had organic growth there, but also the effect of those 2 acquisitions at the end of the last year. The one in the passive fire protection division and the other, Tomtech, in the controlled environment agriculture. We saw contributions coming through from those 2 divisions, which started to change the balance of how our group revenue is made up. Historically, UK Circuits, the platform business, has been the backbone of the group, but we're starting to see that profile change, and we expect to see that continue through the second half of the year and onwards into financial year 25. In terms of gross profit margins, the group margin was 26.6% for the period, up from 20.9% for the prior period. And that really is reflective of an increase in the contract electronics manufacturing gross margin, but also reflecting those stronger margins from the passive fire protection division and the controlled environment agriculture division starting to come through with their revenues rebalancing as part of the group. We managed to keep overheads in line with the prior year, despite those additional costs that came with the acquired businesses. And for the first time in the group's history, we showed a positive group EBITDA for the first 6 months. So real sort of move towards one of the key strategies to become profitable and following on from that cash generative. The loss before tax, we managed to reduce from 58.4% to 300,000 for the period, against the prior 6-month period of 800,000. So very much moving in the right direction, right down to the bottom line. Thank you, Andrew. Looking at the balance sheet, we had just over £1 million in cash at the end of the period, with undrawn debt facilities of approximately £500,000. So 1.5 million in cash and availability on debt facilities to draw. During the period, we renegotiated with Close Brothers an enhanced set of debt facilities for the group. Historically, the debt was all on UK Circuits in the contract electronics manufacturing division, but we now have a group-wide set of debt facilities, so we can move funds freely throughout the group to underlay opportunities as and when they arise. And as part of that, we agreed at 850,000 additional facility to underlay. So it gives us really good resilience from a financial perspective, but also to allow us to facilitate opportunities through any companies in the divisions. Looking at the programme of investment through the period, in the controlled environment agriculture sector, we invested £140,000 in product development. That was pretty much all on the sensor grow product. Simon took us through the functions and features of that product and how we're working hand in hand with Dyson Farming under a grant to develop that, to be able to pick up greenhouse gases, etc. So really key point in our product development cycle, and as part of that turnkey solution within the controlled environment agriculture, with extensions into open agriculture and beyond, water treatment, etc. In the contract electronics manufacturing division, we invested 60,000 in plant and equipment to further automate our processes. Part of the margin increase in that division has come about through prior investment in automation and better quality, online quality systems and management, and we plan to continue that through. Looking at the passive fire division, we've just invested in a third injector pump. We had two already, and we've invested in this third one post-period. They cost about £30,000 each, and that will support the new contract for £750,000 that we started in June. It will also support future pipeline conversion, that 6.9 million pipeline we've got there. As we continue to convert, it will underlay that. Each of these pumps, we estimate, will equate to about 1.5 million turnover at capacity. So the 3 pumps enable us to run capacity at 4.5 million. And each of those pumps has a team of 5 to 6 people around it. So you can see that we can scale, as we convert the pipeline, we can scale readily without too much capital investment there. So all in all, real good period of progress, EBITDA profitable, in the right direction to become group profitable bottom line. And that's a centre part of our strategy as we move through the second half of this year and as we go into financial year 25 to ultimately become operationally cash generative. So if I can hand back to Simon to do a group overview and strategy wrap up.
Thanks, Jim. So the group strategy and outlook is we're really focusing on that 100 billion and how we can convert into the marketplace. Tomtec and Light Science are really growing through the acquisition of Tomtec and their customer base with over 30 years of experience. But we will continue to invest in new technology and products. The Sensor Grow product is really important and has a global market opportunity. It's so important that we are being able to measure and detect CO2, N2O, CH4, and NH3 alongside temperatures and humidity is really important breakthrough for the business. So we will continue to develop these products for enclosed environment, but also broad acres and also water courses and environmental programs, if it be in city centres or in towns. We continue building a strong customer base and also partnerships and distribution globally, if that be in Australia, Middle East, Americas or South Africa. In UK circuits, we continue to look for acquisition opportunities to complement our organic growth, invest in equipment and skills, and expanding into new markets as we've demonstrated with PuckTrack and putting electronics into golf balls. This is a strong, profitable platform business, been going over 25 years and continues to grow organically year on year. And we're very pleased with the progress now. With Injector Fire Barrier, we're going to continue organic growth, as Jim mentioned, adding extra pumps when required at £30,000 per pump, and the teams which are required between 5 and 6 people per pump, and investing in that skills of training, but also in accreditations as we grow. Building partnerships with blue chip companies as I mentioned earlier, the average value of an order is between 200 and 300,000 pounds. And some of our clientele have got buildings which in their portfolio 20 or 30 buildings, but also over 300 buildings within their portfolio which need remedial work. So being a partnership with these blue chip construction company is really important. The other added benefit, as we mentioned earlier, it's strong gross profit margins and near-term cash generative. So what we're looking here as a business, as a group, is to level up the revenues of where they come from. So it's not just the CEM side, but CEA and passive fire protection. And with these new key divisions in CEA and passive fire protections, we will see the margins rise as well as the group revenue grow, which filters down to that key area of cash generative by the end of the year, moving into 2025. We've got a strong cash runway, and we're really pleased with progress so far this year and continuing in for the rest of the year. I'm going to open the floor for any questions, but I want to just say thank you very much for listening.
That's great, Simon, Jim, Andrew. Thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Simon, Jim, Andrew, as you can see, we have received a number of questions throughout today's presentation. And Andrew, if I may now hand back to you to chair the Q&A, read out the questions where appropriate to do so, and I'll pick up from you at the end. Thank you.
Thank you very much. So the first question is relating to the CEM side. We'll pass this one over to Jim. So CEM has had a strong period. Now that the global electronics component shortages seem to be subsiding, what is this likely to mean for the company in the short and medium terms?
Yes, we've certainly seen that supply chain issue correcting over the last year, in particular in 6 months. And with it comes certainly more stability over pricing and visibility and control over our pricing. We haven't seen the wild sort of increases against short supply. So, beneficial effect in the stabilizing of pricing within the market. With that, we've seen a drawing in of forward orders from customers because, they don't have to order for quite as far a period out. But, it's really, there's opportunities that are presenting now with some of the geopolitical issues that are going on worldwide. The shipping issues in the Red Sea, the sort of risk of China and Taiwan. So we're seeing that reshoring trend for the CEM market, and we definitely see future growth. We've been growing that company year on year for the last 4 or 5 years, and we don't see that changing. We see organic growth. We're also considering acquisition opportunities within that sector, and alongside that, we're automating and training people in the division, and we're seeing that come through in stronger margins. So we see it as a key part of our group. It has been the backbone historically, and we don't see the importance of that getting any less, but we do see the other divisions rebalancing revenue and profitability.
Thank you, Jim. Go on for Simon here. So are you happy with the group structure, or are there any further changes to be made?
With the group structure, there's always, as you grow as a group, each individual division scope to make changes and to improve, so that we become more efficient. We're certainly, with the Tomtech acquisition at the end of last year, looking to move some of the manufacturing into our manufacturing facility at UK Circuits. This makes us more profitable moving forward and more efficient. And also, when we do global expansion with partnerships as well, we'll see that come through as well. And as we expand, we'll bring more members of the team as and when required.
Okay, thank you. We've got one on the passive fire side now. I can take this one. So It was, what is forcing building owners to have their buildings remediated, and why would they spend the money? Well, we heard in the presentation how, following Grenfell, you've got the Building Safety Act 2022, you've got the Fire Safety Act 2021, where they're really talking about sort of buildings over 18, well, between 11 and 18 metres, ban on combustible materials, the sort of creation of a golden thread. So it's almost like an online manual of every building of that sort of size. And then also the requirement for a responsible person to be created, who's through the building owner creates a fire risk assessment of the external walls. And this is really our first interaction with either a building owner or a construction company, where the building owner has gone to them because they built it and they want them to do the remediation work free of charge. And then we'll get the call that says, help, we've got to take the whole front of the building down. Is your solution an alternative to that? And then we've got a number of different Warrington fire tests that we can then go back to see if that cavity has been tested and our solution is a fit for that. And then we kind of go from there. Actually, there's another one about the passive fire side. So following the acquisition of Injector Fire Barrier, how is the integration into the group going? It's going very well, really. I think our initial focus was on getting the sort of accreditations in place. So they might be industry accreditations, health and safety, quality. Bear in mind our customers are, great big blue chip construction companies. They need to see scale. So having those in place is really important. The PLC thing for us helps us enormously, because a lot of our competitors are even smaller than us on the installation side. So just that governance that you've got with the PLC bit's a real benefit when you're trying to sell to sort of the big blue chip builders. So that's good. You might have seen more recently, we've sort of appointed an MD for that division, Sean Tasker. He's been with us a couple of months now. We've all got day jobs in a company of this size. His main one will be the sort of generation of new business, as well as obviously driving that business forward. But at the moment, we've got sort of 14 guys on 2 different sites. And, we've built that team, and, we can recruit quite well. As Jim was talking about the pumps, they're sort of 3 or 4 weeks lead time. So we can scale up pretty quickly, really, as time goes on. And we hope to have some more news on that in the near future. Okay, let's go. How are you going to capture overseas business in CEA? We'll put this one through to Simon.
We're capturing globally. We're capturing it through our strategies, through partnerships, distribution centres. So the key thing for us is making sure that we've got solid partners. Opening those doors around the world is extremely difficult without going to lots of exhibitions and showing your product. Having Richard Mills on board as a NED is really supporting that, because he's been doing it for years. And so he's already brought to us many partners that we started talking to in America, in South Africa, obviously, since we signed up our first partnership, but also the Middle East and Australia. And we'll continue to work to open those up, to enter the market much quicker, but also at a less cost to the group. And that strategy seems to be working well.
Okay. Are there any other potential acquisitions on the horizon, Simon?
Yeah, we're always got our eyes and ears open for any possible acquisitions. I think our focus is really in the contract electronics manufacturing side. We've got capacity. We're looking to move into new markets, and looking for an acquisition which has already got the accreditations required and is involved in those markets would be a really good fit for us. So we continue looking for acquisitions in that sector. In the CEA, we will also continue to look, as we did with Tomtech, bringing that company within the group into the CEA has created good, strong revenue and profit margins for us in the CEA with over a 30-year-old business. And it speeds up the process of not just organically growing, but also by acquisition. It really supports the group in our direction we want to go.
Okay, thanks, Simon. We've got one here on, are there risks or dependencies on the supply chain that need to be addressed? Really, on the UK circuit side, those risks in the supply chain are what gave us a massive market opportunity, post-COVID. I think our ability to, go to the different brokers, dive under the legs of the big boys that are going for the massive volumes, the automotive people, we won a lot of business there because we were giving people dual alternatives in lead time and price. So I think that, that gave us really an opportunity. It was a very painful experience, but it was a very, very good opportunity. That's on the CEM side. On the CEA side, really, that's all been dealt with, well, not all of it, but a lot of it, we're dealing with against people like Philips and Osram and people like that, great big companies. And what we did is we patented the sort of PCB board that goes inside our lights that allows us to very quickly remodel the sort of circuitry to take any type of LED chip. So, LED chips get more efficient with time, or you might want a different type for a different color. This system allows us to swap and change. So, we use Philips chips, we use Osram chips, and as well as other people's, but we're not beholden to them. At any time, we can just change out to another one. That would be the CEA side. On the passive fire side of things, the risk there would be that, we are focused solely on the injector clad solution. But, we have quite a good, robust contract in place that was part of the acquisition. And, at the end of the day, at the moment, we would be the biggest installer that they use, that is buying material from them at the moment. So, that should keep that relationship going. What steps can be taken to sustain and enhance EBITDA going forward? Probably one for Jim.
Yeah, I talked, and Simon's talked a little bit about the rebalancing of the revenue within the business, and that's absolutely key because, historically, the contract electronics manufacturing division generates 23% gross margin, whereas passive fire protection, can be circa 50%. Controlled environment agriculture, 30 to 40%. So you can see as pipeline converts from those two sectors, it's going to not only rebalance the revenue contribution within the group, but it's also going to push the group gross margin upwards. And we do anticipate that to increase from the 26.6% it was for the first half. We see that rising as we go through the second half and beyond.
One here on how quickly and easily can you grow injector fire barrier? Are there enough trained operators, or is it easy enough to train them? What we found is when we're sort of placing adverts, we're getting sort of 70, 80 applicants within 2 or 3 days. It's been quite phenomenal. And so what we've been able to do is up the ante a little bit in terms of the qualifications that are required. So we're going for more passive fire protected qualified people to work on our site. So we've been able to build really high caliber teams in quite a short space of time, and then just put them together in our training matrices to make sure that we've got all the right qualifications and training in place before they go on site. So it's been really good, a really good market from that respect, and we've managed to get a good retention rate as well, keeping hold of the teams on site. Our aim is really to keep them going all the time. So another one here, you're a tiny company operating in 3 different markets which are large, so can you effectively compete in all 3 with the resources you have, and what is our competitive advantage in each market? I think, can we compete in all 3? The CEM side, we're probably an average player in the UK, so I don't see a problem in that. I think on the CEA, if we were starting today, then yes, we would probably struggle to compete. I think the good news is that we've spent £5 million developing the products over the last 2.5, 3 years. So that work's already sunk. It's already been done. We're just going to the final sort of stages of it now, really. With the add-on products to the sensor and things like that. But the core products are already there. And really, the way we've designed them is a way that we don't have to line up against people like Philips and Osram, because they'll sell you a brown box item out of the catalogue. We'll sell you that, but we'll also sort out the fact that 5 lights go into one driver, for example, saves on cabling and things like that. So whilst we might not be able to compete with them on a like-for-like light, we can compete with them when you add together the whole infrastructure into it as well, and then bringing Tomtech in from the installation side as well, which they don't tend to do. So I think that helps us kind of compete as well. And then on the passive fire side, I think, like I've already alluded to, particularly finding that with the big main contractors, the fact that we're a PLC and there's a lot of governance in there, and we can't run away with a deposit is a massive sell. It really is. And we are getting some of the bigger projects put our way from a quoting perspective than some of our competitors. And in terms of size, we are bigger than most of our competitors in there as well. So we're kind of confident, and thankfully a lot of the hard work's been done already on the CEA side. Simon, how does a CEM identify sectors for which it wishes to work, and how does it market itself to selected sectors?
It's an interesting question, good one. So from our point of view, we look at sectors which are growing and how we can add value. So we're always looking at various sectors in the marketplace and then see if they're growing sectors. So if it be audio, if it be gas, fire and sensor technology. Most of the time we're manufacturing product for other companies and manufacturing that from start to finish to a finished product. We don't make our own product in the CEM side because we manufacture our CEA product for Tomtech and Light Science in that sector. So it's where our customers are driving and the inquiries coming through. But majority is looking for those key sectors, and we see healthcare as being strong, but also the military applications. Also, as we see more conflicts around the world.
That's great, Simon, Jim, Andrew, if I may just jump back in there, and thank you for addressing all those questions for investors today. And of course, the company can review all questions submitted today. I will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Simon, could I please ask you for a few closing comments?
Yeah, absolutely. We feel that the half year has gone really well and probably better than what we proposed. Our strategy is taking place and is fulfilling nicely. And with the 3 divisions now, that really evens up our revenue. But as you can see, our gross margins are increasing, which then delivers the key thing, which is profitability, which Jim mentioned earlier. Having that profitability to the end of the year and going into 2025 is really important. We've got the cash runway to take us there and into 2025. And also we've got the products in the CEA market, which can expand globally, and tailor making those for our distribution and our strategy there, setting up with partnerships globally. So we feel that we're in a strong position going in the right direction and continue that growth organically as well as through acquisition. I'd just like to say thank you to all our investors for investing in us and for joining today.
Perfect. Simon, Jim, Andrew, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Light Science Technologies Holdings PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.